Thank you for joining us today. Hello, everyone. Happy Wednesday and welcome to today's Capital Connect webinar, a guide to body corporate insurance and industry update. I am Julie, a Senior Community Relationship Manager and Team Leader at our Redcliffe office, and I am your host for today. The webinar will be presented by Craig Stanley, CHU Strata Business Development Manager for Queensland and Northern Territory, Todd, a Senior Community Relationship Manager and Team Leader at Capital Gold Coast office, and joining us online will be James Nicholas, a partner at Chambers Russell Lawyers. You can expect each presenter to have the floor for about 10 minutes. By the end of our time today, we hope you'll be informed and knowledgeable about the Strata insurance and body corporate maintenance. Here at Capital, we're passionate about working with our owners to create healthy, happy, and harmonious communities. Before we get started, I'd like to go over a few items so you know how to participate in today's event. We've taken a screenshot of an example of a Zoom attendee interface. You should. We don't have one. Sorry, we don't have the interface. You will have the opportunity. Sorry, I don't have the screen there that I thought I had. You'll have the opportunity to submit text questions to today's presenters by typing your questions in the questions pane on the control panel. You may send in your questions at any time during the presentation. We will collect these and address them at the end of the presentation. We may not get to all your questions today, so those that we don't get to, we'll, through our office, get back to you after the webinar with some answers for you. It is a 1-hour webinar. It will be recorded and uploaded on YouTube, and we will send that link to the webinar following our webinar in the next couple of days. And to make the webinar more exciting, we'll be giving a $100 Visa prepaid card to those who submit their feedback by Monday, June the 27th, to be included in the draw on Tuesday the 28th. We will announce that winner on Capital Facebook page on Tuesday. So that's the logistics for our webinar today. The overview of our webinar is the Strata Insurance Industry Update. Then Katie will talk about body corporate responsibilities for maintenance and avoiding insurance claims. And then James will be our last presenter and he'll speak about 5 legal Strata insurance questions. Then we'll move to our live Q&A portion. So if I can introduce our first presenter, Craig Stanley. He's the Strata Business Development Manager for CHU Queensland and Northern Territory. Craig has 25 years experience in the insurance industry, extensive technical knowledge across many lines of insurance, including Strata insurance, both residential and commercial strata. And Craig will give us an update on the Strata insurance industry. Let's welcome Craig.
Hi, everyone. Hi, everyone. All right. Yeah, just going to my slides at the moment. And it's a pleasure to be able to talk to you about what's going on in the insurance industry at the moment. So just next slide. So really just want to give a bit of perspective first. You know, I want to talk about the big cat event that we've had, but also a bit of perspective. Like before this devastating flood, like we had last year, we had more cat events than what I've ever seen in my 25 years history in insurance. Now, you know, like 2021, we saw hailstorms, bushfires, floods, earthquake. Who would have thought we'd see an earthquake in Melbourne? We saw storms. So we're seeing, you know, a lot more cat events, and we're certainly seeing an increase in severity. And really, as it says there, it was really the royal flush of cat events. Actually, while I should just point out, when I say cat, that is catastrophe. We're not talking about the 4-legged bird variety. But anyway, I need to point out that, you know, The Insurance Council of Australia, for example, they've highlighted that they believe the impact of the number of cats and the event and the severity has a lot to do with climate change. And really, that's really why they've had also a lot of focus. Like, this will increase in future, and that's why they're having a major focus on mitigation at the moment and resilience on buildings, etc. So that's really important. We go to the next slide. This will indicate what we had last year, 2021. Perth, bushfires in Perth, extreme weather event, flooding in Sydney and southeast Queensland, cyclone Seroja in WA in April, extreme weather and flooding in Victoria, South Australia's severe storms, and of course now that was 2021. Now 2022, we see this extraordinarily large event with 216,000 claims. So that is more than the cat events that we saw last year. We've also got $4.3 billion in insured losses at the moment, and potential and rising, to be honest. So that 4.3, that's double what we only saw 2 billion the previous year, for example. So that is rising. Now, this event here, it's the biggest insurance claim event in Australian history, basically 216,000 claims. So those claims are higher than the 2011 Brisbane floods, the Townsville floods of 2020, and the storms and floods in 2021. So that is combined, and they were big events. So we've also, as I said, 4.3 bill, 98,000 property claims, 81,000 in Queensland, 81,000 in New South Wales. Those figures are actually higher because that's data is probably about 6 weeks old right now. So I don't have the updated. 44,000 Suncorp claims. It's likely to be over 50,000, to be honest now. That still is probably some older data. Now, Suncorp have said, it's an extraordinary event and said it's bigger than 2011 floods, which I'm sure you'll remember. Cyclone Yazi, you probably remember that. The Townsville floods, Cyclone Debbie, more than those 4 events combined, and they were really big events. I just want to make that clear to you that they were really big events impacting the local areas, impacting the insurance industry, etc. Had major impacts. Okay, so we'll go to the next slide. Now, this is what we've seen as far as losses. We've seen 2,646 claims. And the thing is with Strata, compared to a home claim, a home claim is counted as 1. Well, a Strata could be 1 unit, or it might be 50 units counted as 1 claim. Okay, so that's actually the Strata insurance claim. And we've incurred losses of 68.4 mil to date. So that's, of course, that's rising. So a lot of those losses were, of course, from storm claims in Brisbane. Sorry, just can't see that. Okay, the participants. Okay, and now we've also got 100 claims where we're seeking hydrology advice. All right, so of those, 100 claims out of that 2,600. Okay, so a lot of our policies, they do have flood cover. So of course, if they do have a flood and they've got flood cover, there's no need to appoint a hydrologist. So it's clear that they're covered. It's really those ones where there is no flood cover that we need to appoint the hydrologist, and there is a question on where the rain came from. Did it come from a overflowing of a creek or river, etc.? So that's where that will come in. And they take time, of course. We've got reports coming back out of those 100. They're coming back now, but there's obviously a lot of demand, so they will take time. All right, we might just add that it's also added 20% of claims to usually our year figure. This actually adds 20%. But also the insurance industry is working as fast as they can. We've already settled 20% of claims and paid out over $1 billion as an industry for those losses. Right. Now, this is the top 10 insurance events in Australia's history. So the nominal value, this one's the most, however, that's unfair because really the Sydney hailstorm, if you put it in today's value, that would have cost $7 billion. Cyclone Tracy was more expensive as well, and the Newcastle earthquake, but it's certainly the most expensive one that we have seen this century. Right. So I just want to put it also into perspective where we were before these floods happened. So, we had that cat activity in 2021. We had COVID. So COVID certainly impacted on, tradespeople moving around the country, due to borders being shut. Certainly impacted immigration. We haven't had the amount of people coming from overseas to be able to fulfill these jobs. And we've certainly had supply issues with materials, etc. The insurance industry has been, quite the same. While we've been locked down, we've had talent shortages as well. And Dave Gow, he's head of claims, and he started basically while the rain was coming down in Brisbane. That was the day he started. Actually, Monday was the day he started. But we were talking to him during the weekend, of course, preparing him for what's happening.
He still started.
He still started. Okay, so it's certainly his most challenging time in his career, and he's seen a lot. He's been around as long as I have as well. So the supply chain implications. So I guess during COVID, following COVID, we basically use construction to be able to stimulate the economies. We've certainly done that. We've seen home builders grant issued by the government last June, and we've seen the severity and the frequency of those climate risks, so those cat claims. So that's really put a strain on everything. So go to the next slide again. We've seen 20% rise in average building claim costs in 2021. Weather has been 50%. But what I mean by that really is when a cat occurs, you can expect like the increases of construction, etc., to potentially even go up by 50% because of the shortages of trades in that area. So the materials will go up. You can have manufacturers that are in those areas as well. If they had a flood or a timber manufacturer and their timber was contaminated, you can't use it. And so you're relying on timber to come from everywhere else. So we've seen imports of timber increase, I think, because of that too. So you've got increased shipping costs and things like that. So Cordell's is an estimator in the construction industry, and they've reported a 7.1% increase in the 12 months, which was the biggest since 2000. And most states saw an increase of 4% in Q3 last year. So we all know inflation, just in general, everyone's feeling the pinch from things such as the war in Ukraine and etc. So inflation is certainly going up, and it's no different with claims inflation, which you probably have seen a bit greater increase. So that's really meant that we've had to increase our reserves by 20%, okay, to cover the anticipated price rises. So I think the supply chain costs, I think that explains it. If you can see that, what $1,000 worth of timber was in January 2020, and roughly 18 months later, it certainly impacted. And if you had done renovations, well aware of that.
She's just done it.
Oh, really? Wow, lucky you. And it's hard to get the tradespeople, the materials, everything like that. So I'll go through this quickly too. The insurance industry, we had 18,000 roles open at the end of 2021. So it's kind of like a perfect storm. Before we even had this cat event, we weren't really in a great position. And COVID obviously had a bit to do with that. So I'll go to the next slide because I know it's got a short period. The talent shortage. We're putting on 2,000 claim staff as an industry to cover this event. 600 at Suncorp. There's at least 500 at IAG, 250 at Allianz, and 150 with RACQ, etc. one good thing about, I guess, COVID too, is that it has meant though that you could be sitting in Broome and you could be helping with claims to do with this cat event. So yeah, people have certainly probably there's been worried about job security and that in the past, but yeah, you can certainly do that. All right, move on. So I want to know what does this all mean to you? So really, I think you should consider more frequent valuation. So obviously under legislation, every 5 years, body corporate should have a valuation. But with that claims inflation, obviously, if you have an increase in 5 years, you're going to be underinsured when it comes to rebuilding for like full replacement value. Now the rate increases, I'd expect them to continue for that next renewal cycle that you have. Well-priced policies will receive less increases than what is lower-priced policies, and that might seem a bit, funny to understand. But I think I need to tell you how what goes into pricing, so you can understand what you've got control over. Because we do have a technical price, and it really depends on what was charged last year. For example, we are getting up closer to that technical pricing where it needs to be, but it will still need to, I guess, go up, a bit further in the next 12 months. But the ones that have defects and things like that, where they've got claims, those policies have greater, are going to feel the pinch a bit more than the others, obviously. So these are the things that can influence pricing. And I know a lot of you're all like lot owners, for example. So I guess I'm probably more talking to like the body corporate when I say that location-wise, what can influence pricing? You can't change this. As a body corporate, you can't change the location. You can't change the age of building, the number of lots, really, whether it's heritage listed or not, or floor rating factors such as lift pools. You're really not going to change those things. But if we'll go to the next slide. So, but these things too, the sum insured, that's controlled by the valuation, and it should be like indexed each year after that. You can look at the excesses as a way to try to reduce the premium, is by increasing the excesses there. The tenancy details. If you're a residential property, you're a residential property. So I've got commercial, obviously the business activities on those commercial properties, that can impact the pricing depending on the exposure there. Like an office risk is obviously a lot better price than a woodworking type risk, cabinet makers, things like that, because they have an increased fire exposure. Construction, it's really, if you've got, it's that cladding, it's like aluminium composite paneling, that should be considered removed if it is, at a risk, and certainly if you've been asked to remove it, that can impact on the pricing. And of course, it's got other exposures to do with not just the material damage, but also loss of life and things like that, because it can, they're things to consider there. Security and fire protection, sprinklers, extinguishers, hose reels, they'll have, a bit of an impact on pricing there. And of course, they're just good to have, good to have, protect the property, to help protect lives. And then building with defects, fire orders, water or structural defects or similar. So I'm really talking about those major defects that we have, and really through that good risk management, you can prevent claims from occurring, and this is where you'll have the greatest impact on the pricing. So with premiums, when we have let's say the technical premium, like if you haven't had claims, for example, and you come to us and say, we've got risk management program in place, can I get a discount? You're probably not actually going to get the discount. Where the benefit comes in is if you're not well managed, if you don't have that risk management program in place and you're having claims, you've got defects, you've got a trend in claims for a certain reason. You've got roofs, a roof that hasn't been repaired that's leaking and things like that. That's really where you're going to get the loadings. You're going to get loadings and you're going to get higher excesses, etc. So at the end of the day, I guess it's important to remember that an ounce of prevention is better than a pound of cure. So I'll pass on to you now.
Thank you, Craig, for that insightful, informative update on the strata insurance industry. I'm sure you've all got something out of that. So thank you, Craig, and I'm sure there's going to be lots of questions.
Thank you.
Our next presenter on my right here is Katie Todd. Katie's team leader at our Gold Coast office. She's been in the industry for 20 years, specialises in large schemes and complex matters, and she'll give an in-depth presentation about body corporate responsibilities for maintenance and how to avoid insurance claims.
Good afternoon, everybody. I just wanted to say thank you, Craig. That was really informative as well. And I did hear this morning that we're now officially out of La Nina, a terrible weather event that's caused so many insurance claims. And is this a boom chakalaka moment, or is there further in store for us?
Oh, good question. No, I would never attempt to make a prediction. You know, I guess at the beginning of that last La Nina, they said it was not a strong La Nina, and we saw what happened. So it's just too unpredictable.
Okay, well, ways in store for us then. So just now, what I wanted to talk about was preemptive maintenance and what you can do for your body corporate and your property to hopefully delay any types of claims by carrying out maintenance. So I think the first step is to work out, you know, are you a building format plan, which is typically high-rise buildings, low-rise buildings, some townhouse complexes, or are you a standard format plan, which is typically standalone homes or townhouses? And it should be noted that a body corporate must maintain the common property in a good and structurally sound condition, and so must the owner of a lot maintain their lot in a sound, good condition. So, as Craig alerted, prevention is better than cure, and body corporate owners should take steps to prevent future issues. An owner is liable, maybe is most likely liable, if they do not maintain their lot and cause damage to other lots or common property. Same for a body corporate. And basically, if you see something that you know needs doing or fixing, you need to tell your caretaker, if you have one, or a committee member, so that they can address it, or your body corporate manager. You know, really don't just walk past obvious issues and ignore them. You need to get involved in your community and help reduce the risk, because it's your investment and you want to keep the value up, and you want to reduce insurance claims, which will hopefully reduce or, you know, keep at bay the premium costs. So just to give you a little brief overview, for building format plans, this was the high-rise ones that we had the picture of. So if you look at these little diagrams here, the one on the right is the ground floor of a, say, a high-rise or a low-rise. The one on the left-hand side is like the first floor. So everything in the dark black line is inside that is an owner responsibility to maintain. And if you look on the first floor, there's on parts 2 and 3, there is actually like a light line which has got their exclusive use balcony, their own balcony there. So that's their responsibility for like tiles and grouting. And on the right hand side of that the picture on the left hand side is a common property balcony, which would be the maintenance responsibility of the body corporate. So for building format plans, body corporate is responsible for pools, barbecues, waterproofing membranes, entry doors, and which are like fire doors and foyers, balustrades, and gardens and roadways, and obviously the exterior of the building. Standard format plan Generally, townhouses are separate homes, as we mentioned, and they quite often have courtyards and little backyards, and they're defined by measurements shown on the survey plan. So that's a common, and you can see on that diagram there that the common property is clearly stated, and that should be on all ideas. And for standard format plans, the body corporate is also responsible for common items such as pools, gardens, barbecues on common property, and shared gardens and downpipes. So just move on to utility infrastructure. So these diagrams are actually available on the Commissioner's website. So just to give you an idea, if you can see that the red lines are body corporate responsibility, and where a utility pipe or wiring goes into a unit, say for instance, like this blue dotted line, that then becomes the responsibility of the lot owner. So like for instance, if you notice a leak, don't just walk past it, talk to someone about it or engage a plumber. If it's a leak and it's severe, engage a plumber yourself, because you will be reimbursed by the body corporate if it is like a body corporate issue. Another thing that we are getting a lot of at the moment is broken hoses for dishwashers and under the sink. So you need to actually inspect these things regularly so that they don't become an issue and flood your wooden floors and everybody's floors below, if you do have floors below you. So it's less cost and better opportunity to get a group price even from a plumber to come around and inspect everybody's at the same time. So just a little bit of a note here, the body corporate can pay for maintenance that a lot owner is responsible for if it has an agreement with an owner and charges that owner for the work. It can also carry out maintenance and recover the reasonable cost from the lot owner if the lot owner has not carried out maintenance under legislation and a notice given to the owner, including the bylaws or by an adjudicator's order or an order of the court of tribunal. So at Capital, we recommend that the body corporate caretaker or committee has a maintenance schedule in place. You can get a professional company to come and map one out for you. You can do it yourselves. There are a lot of items that you can clearly see need to be done daily, weekly, fortnightly, monthly, quarterly, that sort of thing. Things like pumps. Pumps need to be serviced. They need to be re-greased. They need to have their parts checked and replaced. It's easy and quicker and less costly to replace one little part than it is to not service a pump and have to replace the whole item. And if that breaks down and maybe you put an insurance claim in because it's a fairly big cost and it hasn't been maintained or serviced, there may be a refusal or decline on that claim. The same name. Another thing that we recommend is to keep an up-to-date sinking fund forecast, which will help you with regularly planning out funding to replace items that need replacing and also to repair items. And another report, work health safety, which should be done regularly to ensure all items of public liability, such as uneven pavers that can cause a trip hazard and stepping in with your stilettos down a drain hole, that sort of thing. So just to summarise, preventative maintenance is everyone's responsibility. You need to look around and report anything that you see that is untoward or that you're not happy with, you're concerned about, that can be put to rest, like maintained or serviced or escalated into a major issue as required, so that you can keep your insurance at a premium at a reasonable level if you maintain everything that you can and be aware and do the right thing for your body corporate. Thank you.
Thanks, Katie. Some great insights there once again. And our last presenter today is James Nicholas. Those of you that joined us for our webinar earlier in the year would have met James at that webinar. He's a partner at Chambers Russell Lawyers and manages the Queensland practice. He is an expert in strata title law, litigation, with extensive experience in general commercial litigation, building and construction disputes, debt recovery and insolvency. James served on the legislation committee of Strata Community Australia, Queensland from 2013 to 2019 and was elected to the board of directors in 2016 and served on that board to 2020. He's passionate about advancing the strata industry and is regularly engaged in advocating on behalf of the strata industry to government, the media and key stakeholders, as well as presenting seminars on various aspects of strata law and professional development to clients. Today, he'll be shedding light as he answers 5 legal strata insurance questions that he regularly sees in practice and across practice in the industry. So we'd like to welcome James. Thank you for joining us today.
Well, thank you for having me. Can everyone hear me all right? Yep, excellent. Well, after that introduction, which I thank you for, was very comprehensive. I think my 10-minute presentation was taken up just in the introduction. I'm not sure if I can drive the presentation from my end or if I kind of have to indicate next slides. I think I'll probably have to indicate that. So these are the sort of top 5 legal questions that I sort of get, not necessarily in terms of importance, but probably more just in terms of frequency. If there's other questions, we can deal with them in the Q&A. But something that comes up a lot is, and I could probably put maintenance in here as well. You know, we have a problem in the building and then we find out that it's either a maintenance issue or a building defect. And the scheme says, well, you know, why can't we claim that on our insurance? So, and we're fortunate to have Craig here today so that there's a bunch of things that I'll sort of answer, you know, based on my experience, but where it's product specific, Craig might be able to provide greater insight because obviously each insurance contract is different. So strata insurance, generally there's a particular type of product, but obviously if you have a CHU contract, that will be different to other insurers in the market. So generally, I would be saying I'd be very surprised if any inherent building defects were ever covered under a strata building insurance policy. So it's an accidental damage policy, and it's also public liability in relation to the common property. So depending on what type of building you're in, and Katie went through the building format plan and standard format plan buildings before. So different obligations in relation to different elements within the building. And then there's different insurance requirements for those buildings as well. So generally for your building format plan, you will have, well, not generally, statutorily, you will have a statutory requirement to have building insurance, where you've got a standard format plan where there is at least one of the buildings in there with a common wall. Then the buildings with a common wall must have body corporate insurance, and the others may enter into a voluntary insurance arrangement. And where you have no common walls, then those owners can either enter into a voluntary insurance arrangement or they can arrange their own insurance. And I'll explain a little later with one of the other questions why I think voluntary insurance arrangements are preferable to the owners just sort of getting their own insurance, which can lead to unforeseen problems. But generally, when you've got building defects, so you've got some maintenance issue that the body corporate hasn't properly dealt with, 2 things will happen. One will be almost certainly the damage that's attributable to that building defect won't be covered under the policy. It's likely that once it comes to light that there's going to be further discussions that you have to have with your insurer about what you're going to now do about this, because obviously insurance is the sort of pricing of allocation of risk, and the insurer doesn't want to be on risk for things that they didn't know about at the point in time that they entered into the contract. And without fully nerding out on the law of all of this, contracts of insurance are contracts of utmost good faith. So where I get bodies corporate coming back to me saying, oh, we've got, you know, thanks for the engineer's report. This is all very scary. We don't want to deal with any of this, and we don't want to notify our insurer. that is a absolutely terrible move, because your insurer has rights under the Insurance Contracts Act to say, well, had we been aware of this at the time of entering into the insurance contract, and that would have caused us to not insure you, then we can avoid coverage later. So don't think that you can just trap your insurer into being covered by not telling them the things that they need to know. Craig rightly pointed out earlier that some of the things that can go into affecting pricing, and obviously the condition of the building, the durability of the building, you know, how much you know about the building, because it is about pricing risk. Where there are, you know, unknown unknowns in this building, then your insurer is going to have to fill in the blanks with, well, what's the general industry data on that, rather than, you know, what's specific to this building. Okay, it does have cladding, but there's a report from a fire engineer saying this is how you mitigate the damage of that, and the body corporate's mitigating that damage. So do make sure that you make the appropriate disclosures to your insurer, and that you listen to what they say when they have requirements for what you then need to do about it, and that you engage the appropriate experts as well. So probably that's all I'll say about building defects and maintenance, but just don't put your head in the sand on those ones. Do reach out to your insurer. I tell all of my clients when we're dealing with building defects to make sure that they notify their insurer early on. And I guess probably actually before I move on, the other thing that I will say there is we often look at these things through the lens of the original construction, but don't forget that every time somebody comes and touches the building, that is another potential maintenance or building defect problem for the future. So something that happened, we came across recently, which was a bit out of the blue and different to the run of the mill, was a particular retailer who I won't name was providing air conditioner units on a sales strategy where they were arranging the installation for the clients. And this is pretty widespread. So you go in, you buy an air conditioner, they come in, they install it. So there was an event that happened, and that event was caused by faulty installation of the individual unit's air conditioner. We found out that that was some subcontractor on behalf of this retailer. And then because the amount of the consumer goods and the services was over 3,300, then it should have been the subject of a QBCC contract, and statutory insurance scheme should have applied to those works. And the retailer in this case, you know, was up for a QBCC complaint. So instead of them sort of saying, oh, well, it comes with a 2-year manufacturer's warranty, it in fact came with a, you know, 6-year, 6-month warranty. The retailer had to come in and fix that. So what I'm saying here is whenever you've got building defects, you're looking at your statutory insurance for QBCC. For buildings above 3 stories, you've virtually got no statutory insurance, but just devil's in the detail, find out if it's original construction or it's something that's happened since. And as Katie said rightly before, lot owners are responsible for things that go on inside their lots. And certainly if you're in a building format plan and somebody wants to do something that affects, you know, air conditioning or solar panels or anything like that, that might cause penetrations through the building, that can affect the sort of fire protection in the building, water protection in the building, whole bunch of other things that could cause issues down the track. So be very careful of building defects and how they interact with your insurance. I'll go on to the next slide. We'll probably get a bit quicker as we go through all of this. So question number 2. So this came about many years ago for me, and funnily enough, the insurer was CHU. I promise that wasn't deliberate. So we had a committee member that was being sued for defamation for something that had been said at a general meeting. And the again, I would say, you know, generally this will be a no. I'd be very surprised if almost all strata insurance policies with office bearers insurance don't have an express exclusion for defamation claims. However, in this case, and this is something I'll touch on a little bit later, given the relationship between the strata manager and it was CHU in this case, and also given the apparent sort of lack of merits of the defamation claim that was being brought, CHU made the decision that despite the fact that there was no coverage for defamation under the office bearer's insurance policy, that they were going to cover the legal defence costs of defending the claim. And in that instance, because they were essentially sort of going outside the strict policy wording, there were conditions that were placed upon all of this. So it's not to say this will be the case all the time, but your best case scenario would be, you know, an insurer looking at the claim on its merits and deciding that just for the sake of being good guys, or that, you know, they've got a long-standing relationship with the building or with the strata manager, that they went above and beyond in this instance. Ordinarily, you should expect that if there's a defamation claim, that will be something that the committee member has to deal with themselves. Body corporate can't bear the costs of that, and that it's unlikely to be covered under any office bearer's insurance. In the very fortunate event that you're able to negotiate with the insurer to get something like defence costs paid, they generally also won't cover any award of damages in the event that you lose the case, and may require you to pay back the legal costs that they'd advanced under the policy. So, you know, all I can say there is just be very, very careful about what you say and publish, because defamation is becoming a more prevalent thing in strata all the time. There's some changes to the Defamation Act recently, which will hopefully make things a little bit better, but we have seen some pretty crazy decisions in the last few years with large sums of money being, you know, awarded to people for defamation in strata schemes. I'll go to the next slide now. So this is one that comes up from time to time. As I said before, you've got, you know, a range of insurance products from the mandatory, you know, through to the voluntary and somewhere in between. So if we look at this plan, which is again off the Commissioner's office website, thank you, Commissioner, we've got some different types of buildings here within one scheme. So we've got lot 7, where all of the building is contained completely within the envelope of the standard format plan boundaries. So in this scheme, everything in green, let's say it's, you know, not exclusive use common property, let's say that that is part of the lot, and that you've got some lots like 1 and 2, 3 and 4 and 5 and 6, well, actually all the others that have that common wall. So in this instance, under the legislation, all of those with a common wall would need to be part of a mandatory body corporate insurance policy, and number 7 could do its own thing if it wanted to. And if things were reversed, if say 5 and 6 were the only ones with a common wall and all the rest were separate, and this is sort of similar to what I've seen in the past, some of those separate owners just go off and get their own insurance. And then this is something that Craig might be able to answer better for us later on. But I think if you're in that situation and everybody's got their own separate insurance, again, that's going to be, you know, accidental damage to the building within your lot, and also going to be public liability for things that happen on your lot, but anything that then happens on common property, you won't be covered for. The body corporate has a statutory obligation to insure for public liability on common property, but finding a product where an insurer is simply going to come along and say, the only thing I'm providing you with is public liability cover for your common property, unless things have changed since the last time I've looked at this, finding that product where they are not also the insurer for the rest of the buildings is incredibly difficult, if not, you know, impossible. So for that, and probably a number of other reasons, not the least of which being you're fortunate to be in an industry where there are strong relationships between strata managers and the insurers that they deal with all the time. There is only a handful of insurers in this market, and they know the market very well. Why you would then not enter into a voluntary insurance arrangement and sort of go off and get your own, I think you probably would be missing out on some of the you know, better pricing that you might get by joining together, and you're certainly going to miss out on that you know, situation where an insurer who fully understands strata and might be able to help you out in circumstances where the insurance policy itself doesn't strictly, you know, cover the thing that you're looking for. You're certainly going to miss out on that. But I won't say too much about that in case Craig completely cuts me down on that. But that's certainly view on it. If I can go to slide number 4. So I had this a few times, and again, Craig pointed on this where, you know, the pricing of the insurance and even the availability of coverage comes down to a number of different things. So you've got the age of the building, you've got the state of repair of the building, you've got the existence of any building defects, and these things are, well, aspects of these things are within the control of the body corporate. And certainly probably another layer that comes over the top is the goodwill or lack thereof of a body corporate that appears to be managing those things well. So quite often they'll come to me when it's, you know, we've got no money in the sinking fund, nobody's paying their levies, our insurer's telling us that we've got to, you know, spend X amount of money on rectifying the building or they're going to deny coverage. And invariably one of a couple of things happens. Either I say to them, you should terminate the scheme and, you know, sell this off to a developer. And because that's such a hard process, it never happens. And the other thing that tends to happen is you get a insurer of last resort. I guess I don't mean to be disrespectful by that. There's still, you know, a massive worldwide sort of, you know, renowned insurer, but the premium that you will pay will be staggering. So we've had situations where no other of the regular strata insurers will provide coverage to a building, and they've had to go out to a massive international, essentially reinsurer to be able to get insurance, and they're seeing like hundreds of thousands of dollars for, you know, 6-month policies and things like that. So it's not a part of the world that you want to see yourself in. And how did these people get there? Well, they weren't dumped straight away. So generally it's been, you failed to notify your insurer of things as they've been going along, and then you failed to act quickly and appropriately when you do find out that you've got these problems. So, and again, Craig will correct me if he thinks I'm wrong about any of this, but how I generally suggest that people deal with this is know what's going on in your building. So engage suitably qualified experts and get proper expert reports. Then disclose those to your insurer, along with a detailed scope of works, a risk assessment, a schedule of the timing of these works, and then stick to it. Because if you can say to your insurer, yep, look, we're in this situation, we know it, this is what the funding of this is going to look like, this is what the scoping of this is going to look like, these are the contractors we're going to use, and in 6 months' time we will be here, then you're more likely to have an insurer that will, probably on a limited basis, continue to extend coverage to you. If you make those promises and repeatedly break them, or don't have the you know, information backing them up, then all you've done is scared your insurer, and you haven't got the necessary information they need to properly manage that risk. So if you find yourself in this situation, really need to get on the front foot, really need to impress upon your insurer that you are one of the good risks who are going to manage these things properly, and keep them updated as you go. It may well mean that you've got to take out a strata loan to fund the works. It may be that you've got to go and raise a special levy. But again, any of those things that you're doing, even the fact that you've got a general meeting coming up where you're proposing those things, let your insurer know so that they understand that you're not one of the schemes that's going to put their head in their sand, and then they're going to have a major bun fight sort of down the track when, you know, things go wrong. So on to the last slide now. This is one Craig might not like so much, but, you know, we've had situations obviously where, you know, an insurer has, you know, denied a claim, and what do we do about challenging that decision? So one of the key differentiators here, as I've already kind of mentioned, is the, you know, quite often long-standing relationships that the insurers have with this sector. So, you know, Craig, 25 years in the industry and strong relationships with strata managers. So you're, you know, not just another customer on the end of a call center phone, you know, ringing up with a gripe. Use your strata manager, use that relationship that they have to, in the first instance, seek some clarification. You know, obviously, when it comes down to it, it's down to the wording of the policy. Is something, you know, this or is it that? Do you have a floating floor, or do you have a floor that's, you know, affixed in part of the building? Was this, you know, overland, you know, water flows? Was it, you know, rising tides? Was it storm damage? So a lot of those, you know, definitions within the policies will have a significant impact upon whether the claim that is being made is actually going to fit within the wording of the policy. Use your strata manager's relationship to get further information. Once you better understand why the claim may have been denied, then one of the things you can do is raise an official complaint internally with the insurer. And most insurers have an internal review or complaint handling policy, and they will, within the limits of that, they will review that decision and come back with any change to that decision. Beyond that, you're looking at making a complaint to AFCA, which is the Australian Financial Complaints Authority. Some of you may have known it under its old sort of moniker of the Financial Ombudsman Service, or FOS, and you can make a complaint to them and they can investigate and make a determination in relation to the matter. And then finally, obviously, we could be looking at court proceedings depending on what the sort of issues in dispute are. And one other thing which I think is probably also worth mentioning is, because in bodies corporate we have lot owners who have responsibilities, we have resident managers who have responsibilities, we have the body corporate that has responsibilities, and you also have other service providers who have responsibilities. Sometimes the insurer that you might end up dealing with may not be your own insurer. So in circumstances where you're making a complaint against, making a claim against a service contractor, you may end up in a situation where it's in fact that service contractor's insurer who is, the party that the body corporate is, going to end up kind of suing. And so in circumstances where, the body corporate has, widespread history of failing to maintain, and all of those things are kind of, there on the body corporate record, then someone who is not your insurer, someone whose sort of vested interest is to try and discredit and deny the body corporate's claim, will use all of those things against you. So not only is it sort of best practice to, maintain the building properly and do everything that we're meant to do, not only will that result in quite likely you having the best insurance offering from your own insurer, but it can also protect you from the adverse arguments that you may get back in the event that it's some third party that we're seeking to recover from. And I've talked for a long time, so I'm going to now stop and hand back over. But thank you, and I look forward to any further questions that we might deal with.
Thanks, James. That was really insightful once again, and some really good information. We have seen quite a few questions come through on the Q&A and the chat. Unfortunately, we've got to 1:54 and we are not going to be able to answer everyone's questions. We've sort of just scrolled through over here and picked a couple out that we'd like to ask, because we think they'll answer quite a few questions that people were raising today. And then we can get back to others with answers to their specific questions. I know a couple did say, can they hang around after 1? Unfortunately, our webinar will end at 1 and we don't, 2, sorry. It's 1 somewhere. So unfortunately today, that's a no for that. But if you have got any specific questions, you can email us and we can put them to James or the team at CHU and get some answers for you afterwards. We're more than happy. So we did have quite a few questions, and we might put this one to you first, James, and then we'll get Craig from CHU to respond if he's got anything else. Around where we've got, well, not high rises, we've got apartment blocks that even could be 4 up, 6 ups, or 20 floors. And it's around when you've got a lot owner above and below and you've got water ingress from one lot to another. What action can a body corporate committee take if a lot owner is not maintaining their lot and not addressing an issue, e.g. the bad water leak that is damaging other units? I'd like to know more about the emergency provisions that a committee can take if an owner's not addressing and they're responsible for that maintenance. And what is the process to reclaim costs from the owner, including insurance excess? So I know we have some provisions under the BCCM Act that you may be able to just quickly share with us, James.
Yeah, certainly. I'll try and speak quickly because I know we don't have a huge amount of time. But essentially, the body corporate's got a couple of key powers here. So the first is that under the legislation, it's the owner's responsibility to maintain the lot, and that's an obligation that can be enforced against the owner, initially via the Commissioner's office, and then depending on how that goes, potentially you could end up in court enforcing those orders. If something was an emergency, then the body corporate has powers of entry. Generally, you've got to give at least 7 days notice before entering a lot. Under an emergency, you can give less. My general advice to people is to go off and get orders to enter the lot, just because it protects you a little bit, because you can end up in potential liability yourself, or you could end up in just a really aggressive and difficult confrontation entering into someone's lot. But in an ideal world, the body corporate would exercise its power to enter the lot, whether that be unilaterally or by agreement. I'd seek agreement first, take an expert in, determine what the actual problem is. If that problem is the lot owner's responsibility, then the lot owner should be required to fix it. If it's the body corporate's responsibility, obviously the body corporate fixes it as quickly as possible. If it's the lot owner's responsibility and the lot owner doesn't fix it within a reasonable time, again, body corporate using the power of entry to go back in with suitably qualified tradesperson to fix that and to recover the costs of that from the lot owner as a debt. So how do you do that? Essentially using the debt recovery process. So you'd be off commencing court proceedings to recover the body corporate's costs there. I know we've got 2 minutes, so I'll keep that answer short. See if Craig wanted to add anything to that.
Yeah, I just want to really cover that we'd really need to get that issue covered, like fixed first before we could fix the resultant damage. So the person underneath, we would pay out for that resultant damage, but of course we don't. When there is a problem, we don't pay for the defect issue. And of course, for that, in that case, we actually wouldn't recover the costs.
And there was, sorry, Craig, there was a couple of questions. I saw a couple of comments on the way through. Is there a statutory time or that someone has to notify their insurer of a potential claim or an event? So if we've got this and we've got to go up to time frames to get into an apartment, we knew about it 3 weeks ago, a month ago. Should
Well, they
we
could be prejudiced, if it leads to further losses and everything. We're really going to be paying for the initial loss. And if they take time and, through taking time, the costs escalate, they might be up for that themselves.
Thank you. And there was another one I just saw in regards to, you spoke about insurance valuations and our statutory time frame to have them done 5 yearly, but let's get them done more frequently. Someone did ask, even if we did get it done more frequently, and we've seen these rising costs as we have at the moment through to COVID and our CAT events, if what we've got insured for and there was a total loss is still not enough, is someone going to be out of pocket? Where does that sort of fall, land?
Well, there is some protections there under the policy. For example, if there's a lot of, lot owners, fixtures and improvements, for example, if the valuation is not going to cover, if they put the valuation, they're not going to know if someone puts a $250,000 kitchen hypothetically in place, but there is that protection. There's also CAT cover, so you can get 15 or 30% CAT cover. So because of when a CAT happens, the costs escalate. So that's the benefit of that.
And I know I say to my schemes, and I'm sure Katie would say to hers, when they look at their insurance policies, do we need CAT cover? I always say, absolutely. It's most insurers, I don't think. Yeah.
Yeah, definitely. Because as we've seen for weather events, we might get 50% increase in the cost of the claim just for over that period.
And there was one other that just did ask about contents insurance. And for those that do have their strata policies with CHU, CHU does offer a contents policy for landlords and owners.
Yeah.
So that's another great product that CHU has.
And then there's no excess actually for the landlord. So what you can have, if you have a water damage claim, it could be against the body corporate, it could be against the you know, a claim on the landlord's policy could be on the contents policy. Now, we would only charge it the excess on the body corporate policy, and we wouldn't apply it to the landlord. So it's much cleaner when that happens. So you just need one builder, one loss adjuster, etc., to come in and get that repaired rather than waiting on, you know, our builder, waiting on another builder or someone to come in and rip up the carpets and things like that. So it's cleaner.
I might just jump in there and add that I have had in the past clients who hadn't understood their need to get their own contents insurance. So again, it's properly understanding the body corporate's insurance product that, you know, people buying in, they think they've got insurance, but they haven't worked out, you know, what that coverage is. So good to know that CHU has both. Many companies, you know, don't, and some lot owners just omit getting their own contents insurance and can suffer unrecoverable loss as a result.
Yeah. It's important to realise too that carpets
I
is
was gonna say carpet.
carpets.
Carpet.
You need that because carpets is not not building, it is contents.
I think Chris is right, winding us up on a flying carpet here. So thank you all for attending once again, and unfortunately that is all we've got time for today. So don't forget to submit your feedback. You can scan the QR code on the screen and get a chance to win that $100 prepaid Visa voucher, which will be drawn on Monday, and we'll announce that on Tuesday. And once again, remind you that we will send the full recording of the webinar out soon, so keep an eye out for that one. And we hope to see you at our next webinar, and we'll go through and get some of those questions answered and out to you all. So thank you all. Thank you, Craig, James, Katie, for joining us, and our team for setting it all up. Have a great day, everyone. Thank you.